Okay, so good morning, everybody. So I'm starting this live update a little bit late today because I had some mentoring this morning and I had some other things to do extra out of trading. So sorry for that. Coming back to this is a chart of this week that started on Monday. This is the Monday open here. So we went long here, all the green arrow as long entry we call in the Twitter feed. We started to get long again yesterday after this move. We'll speak about that now. And now I'm long. I just banked 45 pips from this morning. By the way, I added longs here, so I have to put this entry too right on that 61.8 fib there to the pip on it. Okay, so that's what we have for the week for now, and two shorts only. One here after this impulsive move up, we had 60 pips here that we banked, and another one I took yesterday. I had posted this chart with this area to get short before the CPI numbers, and that's what I did. So I went short. I can take off this one. I went short here, banked. I think in this area, I stopped looking at shorts. I banked 140 pips or something like that. And then I started to get long because I was thinking that this move would end soon, which happened. And I still want to be long. That has changed nothing. It's just intraday noise due to the inflation in US. So nothing big happened beside this move, of course, which is a nice move, but technically speaking, nothing, absolutely nothing has changed. Still, we keep this area virgin, not violated. Nothing will change in my view. And even if we go there, it will be even stronger on the downside till here. So we have this complete area, and then we will have lower threading that we would see if we go there, which is not what I think will happen, but we are ready, as always, for everything because we are not biased, but technical trading here. Okay, so we bounced this morning from the 61.8 fib here. When I called along, I booked some here because I banked some here because we have the 1 hour 2021 EMA. As you can see, if I can grab it, yes, 2021 1 hour EMA. So it's usually a place where we can see some pullback, and we have a quarterly order block, the QBOD, the quarterly bodies here. So it's an area that can provide some pullback. If we pull back and if we take today's lows, which I don't think will happen, because if we look well, the 61.8 was a double bottom to the pip on this level. I went short here. No, it was yesterday with a stop under this 50% fib. So we have had nearly a perfect double bottom. We missed it by 2 or 3 pips, but this 61.8 here has been reacting like we expected. So for now, it's very simple. We keep on buying the dips if we see some, with some setups. Speaking about setups, let's go to it, because of course there have been some change yesterday after that move we saw. So concerning the price exertion setup, and that's very interesting moment because we are now inside a daily long setup, but we posted a 4 hour and a 1 hour at the same time and a 15-minute, which was a perfect confluence of signal we had. So this thing has a great potential on the upside. This one is not ended yet. So if we look at that on a daily basis, I have not done it yet, but we can look at it. So you see here, we had that divergence, that dynamic divergence. Let me grab this trend line. So we had that dynamic divergence when we had this this signal here. That's a very bullish signal always. We could get another setup if we would go lower. This one would post another long setup and it would be a double divergence. So that would be even better. So let me put it well here. So that's what we had. So we are inside this divergence until we don't touch this low here. This move up is going on. All that, we can keep this. I didn't look at this yesterday. All that inside a huge monthly setup, which could post, same thing, a divergence if we would go a little bit lower, and that would be a monster signal. It's already a very, very powerful signal. So that's what we have on the monthly. You know that it has not changed, and it doesn't change. We are inside a weekly, of course. And what we just saw now is this weekly, this daily divergence inside a monthly and weekly. We had the 4 hour, the 1 hour, the 15 minutes. So each time we get a long signal on the 15 minute and 5 minute, it's a buy. That's very simple. Concerning the volume exhaustion, same thing. We have a very low reading on the monthly. The weekly is in between. Interesting, the daily is already on the top, so it needs to breathe a little, and that's what happened yesterday with this pullback. Now, the 4 hour is at lows, the 1 hour was at lows. We had this bounce this morning from yesterday. Sorry, we had this bounce starting yesterday, and we kept on doing that this morning, and we had this small bounce here that we see after the London Open. On the 15 minute and the 5 minute, right now when we are speaking, the 15 minute is on the top, which means needs to breathe soon if we have a price 6 confirmation here, okay? And the 5 minute is at lows. So for now, I'm looking at the 5 minute setup. You see, we are pulling back from that 1 hour EMA here. It's the same chart with the same indicator. The only one is this one that I added on this one. So we have the volume indicator on 14 and 7 period, the price 6 and the RS6, which is the dynamic RSI indicator. So we are now inside that long 15-minute signal. We should see a short signal before looking for new lows. That's what we should see. So the next long setup here will be a buy for me. Time-wise, we are at, as we see, at 9, soon at 9 GMT. So 9 GMT, we still have, let's say, 1 hour up to 10 GMT, 10, 11 GMT before we see all the US honeymooner, as I call them, buying back every pullback of the USD. So concerning this, I can take up this one. Concerning this move from yesterday, this is the CPI move, as we all know. The reason for this CPI move that both CPI and core CPI have been way above the forecasted numbers, which means the inflation for August was way or largely above the expectation we had yesterday. That means in the mind of everybody, not necessarily in mine, but that means, let me go back to yesterday number while I explain that. That means we should see soon a very strong hike from the Fed. And that's why we had this move down, because now people, due to those numbers, you see the core CPI was double than the expected, and the CPI was expected negative, which means a reduction of the inflation, and it has been positive in August. So that's saying the inflation is not at all under control, despite the Fed already hiked 6 times with 2 points or 2.5 points, I don't remember exactly. So that's very important, because it confirms what I've been saying. The hiking will not stop fast the inflation. We all know that, but meanwhile, hiking rates are putting the US economy under pressure because the growth is slowing down for one reason. I always repeat it, but it's good to understand this point. The US GDP is made of over 60% of consumer spending. So the consumer spending is what people spend on things they don't really need. And as soon as the consumer confidence is going down because there is a strong inflation, this thing will go down and affect the GDP, which means reduction of the growth, which means at the same time, when we hike, the companies, the big companies are not investing so much anymore as they used to do because the rate to loan money, the loan rates are going up. So they are reducing or postponing the investment, which is slowing down even more the economy, and which will create in medium term, sooner or later, the problem on the unemployment that will be growing again. So that's the reason why. Today we have another inflation reading from the production price, not from the end user price, but from the production price. Same thing, core PPI and PPI. We'll see what happened there. We could have different number. We could have a less aggressive number on the PPI than on the CPI, because this is consumer price and this is production price. So there is a little bit of difference in between them. So we'll see what happens. Same thing today. If we have a very strong reading here, that will push a little bit more the USD on the upside, Euro USD on the downside, and that will give us more option to buy Euro USD. So the reason why I stay long is very simple. ECB didn't hike a lot. They hiked very, very little compared to what did the US economy, and they did it because the situation of the economy in Europe is not as good as was the situation in US, especially with the energy crisis that is coming. But that makes no doubt for me, US will be in recession very soon. Probably the first quarter of 2023 will show already some recession signs, and perhaps even the end of this year on the quarterly basis, of course. So we will need to look very closely on quarterly GDP, because they could start to show the recession coming behind, and the unemployment will be suffering too. Okay, so for today, it's the same thing. I will just look at that quickly. We go up, and I think, as I say, this move will be erased soon, because the other thing about ECB is that ECB can use the control of the rate, the exchange rate of the Euro USD, to soften or to reduce the inflation, because they pay the energy, most of it in USD. So, and that represents 50% of the inflation. So reducing the rate pressure, the depreciation of the euro will automatically and immediately have a result on the inflation. So that's why I think they are acting already, and they will not let the euro stay under parity for a long time, even if it ever close under it more. But I think they will always bring it back above parity as much as they can, at least on a weekly basis, probably even on a daily basis. And on the other hand, they have much more space, room to hike, because they didn't hiked yet a lot. Even if they are not willing to do it, they have no choice. So that's the reasons why the Euro USD will go up, and the technical reading, of course. So if we would see any lower reading on the Euro USD, we have this fib here, which is very important, the 78.60 fib that was a bottom for several days. Let me get this chart readable. So you see how the 78.6 has been holding the price. We posted 3 fakes breakout under it, as I said, which is a bullish signal because we took the stop under it. We never really touched the 76.40 that I would like and still would love to be seen. So perhaps like today, if there was a very bad, the PPI would be very strong, we could see this one for sure, and we could perhaps see that one, which would be wonderful, because in that case, we would have a fantastic long entry there. That would be really, really great. So that's the 2 levels we have to look at. For the other one, I will post intraday charts as I do usually. So that's it for the EURUSD. Same thing on the DXY. We have the top level here. We have a potential double top that could happen if we would go very hard on the upside with a very strong reading later today with the PPI. Everything is possible, so we are ready for everything. That won't change anything in our view of the market. So we have those this double top that could happen. We have this 78.60 fib, which is the same as we have on the EURUSD, the same, of course, on the DXY, which is a last big swing retracement fib. You see how it has been holding. So for sure, if we would go there, we would see a reaction. And on the downside, the big level, we have a lot of level that I post in the intraday charts. The big one will be this area that I posted yesterday between the 88.60 fib and the 38.2 all-time retracement. This is an ABC, this is a retracement. So that's what we have for now. If you have any question, please let me know. I will stop the recording because they don't need the question part. Let me stop this recording now.